Good morning, everyone. Right. Thank you very much. Does the sound level all right? People at the back? Okay, thank you. Thank you very much for this opportunity to address you. As a software business, we are extremely proud to be involved in this market and the talent that exists around this room and within the city. As it's already been said, is that we have a centre of excellence here and world-class skills. What's also interesting, just hearing to the first two sessions, as you sit there, is that you actually work through some common themes for the day, but also hear some contrasting perspectives. So what I was hearing was very much is that a word of cautious optimism, I think, abounds in the market. And there is actually demand globally for the skills and talents that are available here from London, and therefore the opportunity for Lloyds and London market to export that capability even further than it does at the moment. The need was identified that the world is getting more complex, which is actually the reason for demand for what is available from this market. And we also heard the theme of innovation to address that. The other one that will go a little bit closer to the heart of what I'm talking about here this morning is about value from regulation. It was Stephen who actually did point out is that, and I'm sure we're going to get more discussion on Solvency II. It was Stephen who pointed out is that, well, if we're going to do it, we ought to look for value out of that work. So that is one of the things that I will be picking up in this in the 20 minutes that I have, although we've got to try and catch up with some time here at the moment. For people who looked at the, one of the things is that probably people don't know who Agencyport Software is. It may well be a new name, and if you're curious enough, we will be in the exhibition hall outside, so we'd love to actually have you come to us and to talk about our business and how we help our clients. Whilst it's a new name, we're not actually unfamiliar to this market because our business has been serving the London market for the last 40 years. And for those in the audience who are managing agents, there's over a 1 in 2 chance that you are actually using our software at the moment. So I'm sure hopefully that should stimulate some curiosity as to who the hell we are. The other thing, just by way of introduction, is that some people looking at the older programme will see Stuart Browse, our head of strategy, should be standing up before you here at the moment. Just as an indication of how rapidly this market moves on. Stuart himself has moved on only for this week because he's in Bermuda looking at how we can help a startup out there at the moment, which I think, again, is very interesting because whilst there's still a lot of quite doom and gloom about the industry, yet there are people actually who are bringing forward more capital to it to actually try and make up that gap between the economic and the insured losses. So there's definitely a lot of opportunity out there. I will inevitably touch upon Solvency II, what deems to be the elephant in the room. But I'm also going to consider some wider points of regulation or legislation that are around there. It won't be a cast around the whole of the market or the globe, but I just want to pick on a few things. And if I've been successful, then I hope throughout this I've maybe just prompted some thinking about how to address regulation, either to minimise its burden or to actually, as Stephen said, get value out of it. And to demonstrate that, what I'm going to do is to actually just draw on a number of client examples to talk in real terms about what some of our clients are doing to actually deal with regulation. So the first question for me is regulation, burden or benefit? Is it good for the industry or bad for the industry? And I think this will be one of the themes that will probably be here today. And like David, I would actually like to do a quick hands up. So the question I'd like to ask the audience is, hands up those who see that regulation is a burden from a point of view of being necessary, but not necessarily always helpful. Can I just see a show of hands? Brilliant. So everybody thinks that regulation is brilliant for the industry and helps us all improve. Excellent. I'm really pleased to see that. So looking at the other end of the extreme, therefore I should see a very strong show of hands for people who feel that regulation is a benefit. Those who feel they could be lottery winners out of regulation. A couple, that's brilliant, okay. But of course is that the answer is somewhere in between those two. I think, again, picking up on Stephen's point, is that regulation is necessary for the stability of our industry. And the thing I'd like us to be conscious of is that, again, is how we actually make the best out of it and not just see it as a cost burden and therefore having to reduce that. There we are. I've started off with Solvency II. We had to do that. It's already been mentioned that whilst there's been a deferment to 2014, Lloyds is actually keeping up the pace a bit. And I'd say amongst our customers, we are also seeing continued momentum. Whilst there may be a sort of a reappraisal and slowing down of some activities, nobody is saying, well, we need to stop. Everybody sees as that, well, we've started doing something, let's make sure we actually complete it and complete it to the full. And just as one example, if I pick on Generali Global Risks, which is a client of ours, they are one of those in the London market who do provide a range of very complex risk and insurance solutions. Generali, they've been around actually since 1963 in this market, and they are, like many people, burdened by slightly old systems. And with Solvency II, they actually saw, of course, there was a need to reduce their operational risk, increase their control and their transparency. But then when they put that together as a, well, what is the future of our business? What do we want to do? And that was to actually look at growth. And there was the example about innovation, about developing more complex and complete risk solutions, looking at a number of lines come together. Because they are addressing multinational countries in their multinational companies in their business. So for them, they actually wanted to replace their underwriting system, and it was for addressing Solvency II, those key factors, but also with a view to growth. With some 800,000 policies, 32 million technical accounting records, and 1.3 million claim events, we were very proud in the last few weeks to have helped them achieve their objective and to be in a position of control for their business. I raise that not particularly as a selling point for us in our business, but the thing I wanted to bring up with that is that we actually had a reaction from the compliance team, who are not necessarily right at the top of there in terms of objectives for new technology, except for obviously for just doing what they need to do. But the compliance team actually turned around and said they were thrilled. They were thrilled with the new system they'd got. And the reason they were thrilled is because for the first time they actually understood the business they understood the activity of the business. And pretty soon, they weren't able just to say that, well, we understand, but they were able to actually identify where they were able to eradicate steps in what they were doing and already improve control and reduce cost. So I would like to bring that forward as an example, is that taking the right approach to it, you can actually do something to actually improve your business rather than just comply. The key thing for me in thinking about Solvency II, it is essentially to get it right, it is the capture of risk data at the most granular level, being able to process that with minimal manual intervention and making the information available to professionals in the organisation so they can make decisions. So to the underwriters, to the actuaries, so they can actually use information as soon as possible to steer the business. One which is a little bit different. Of course, we're not talking about so much, but clearly is that we've got the financial crisis at the end of the last decade, which still hangs over us. And of course, in the States, the result of that was to bring about a complete overhaul in the financial regulatory regime. Whilst the DoddFrank Act goes to what they term as being 16 titles or sections across 800 pages of legislation, which became enacted in July last year. The fifth title in that was the one that actually relates to insurance. Within that, there was two subtitles, one of which was the Federal Insurance Office, which I'd see as being very much giving rise to the opportunity for streamlining and consistency in the US market. And that's what it's deemed to be doing, so that each state isn't just going off on its own track, but they do have some sort of central control. And then at the state level, a number of acts of actually liberalisation. So making changes to actually make the insurance market more open to outside competition, both from other states but also from outside the country. Now, this clearly is one of a regulatory change which is a market opportunity. And for one of our customers who are a specialty player in the London market, they've already used or are making use of portal technologies, basically to some extent websites to you and me, but basically making use of websites out into the market to make readily available different risks to specialty brokers in the market. So they can actually go there and see effectively what's available from this carrier in London and actually place business directly with them. That will come in various forms, because in some cases it's simply a referral. In some cases they can actually progress through the transaction close to binding. The third area that I just want to quickly touch upon, again, it's been mentioned a bit today already, and I'd be interested to hear more discussion about this later today. Lloyds, of course, has always been operating on an international basis and has been providing reinsurance into the Chinese market since the 70s. But of course, in 2007, we saw an opening of that with the license for onshore access and the establishment of Lloyds China. And then recently, in September last year, then the non-life license became operational. And of course, there's been a number of syndicates already playing in the Chinese market. But more recently, we saw the innovation of Catlin in November with their partnership with China Re. And then looking a little bit outside of the core carrier market, Lockton in March last year, who established a license to operate in China. And one of the interesting things about, I think about China is that whilst Lloyds is providing the main supervisory regime, obviously in line with the Chinese Regulatory Commission, on a broader insurance basis, we're still seeing further developments from the Chinese Regulatory Commission. And whilst it's not necessarily that something that really has a huge bearing on people within this room, one of the things that we're seeing and experiencing is that that development in the regulatory regime in China is still actually, to some extent, constraining and inhibiting some or providing over control of some business activity. For us, we have a number of clients who are health insurers, one of which operates out of Dubai to service an expat community globally. Their challenge is that whilst they have one underwriting and policy system that services their business globally, when it comes to China, oh, somebody didn't do it. Any more phones? No. One of the challenges. Oh, it's that time already. There's a little red light that flashes. One of the challenges in China is that there is a constraint on where you can do processing and data. I've got a red light flashing. Is it? How long do we on the?
Timed out, really.
Timed out. So I've been here. I've been here.
Landing, I think.
20 minutes. 20 minutes. I'm going to have to skip to the end, aren't I? The key thing for us about anybody who's addressing the market, really, it is about for us being a model insurer is about being able to place business anytime, any place, anywhere. Now I'm being timed out, so I'm going to have to actually skip to the end.
All right.
But I would really love to actually have a further conversation with everybody about this to explain this model to people.
All right, Philip.
All right, thank you.
Thank you.
Wow.